Hi there, welcome to Kneppy Invest. Time for another weekly portfolio and technical update. I hope I won't spend a lot of time in my portfolios. They're all doing better than the benchmark, and that benchmark is the STW. The long-term portfolio is doing slightly better, but my other two portfolios, the medium-term and the short-term, are doing significantly better than the market, and that is my end goal, is to significantly outperform the market. Because if I can't, then why am I bothering with doing all this? Apart from it being fun, and I actually do like doing or investing, I could save a bit of time if I just put my money into an ETF. If I can't beat the market, some people will say it's hard to beat the market. I don't think it's that hard if you put a little bit of time and effort. Now, I did make a few purchases and I did offload a couple of companies. So I decided to sell Genus Plus and Australian Ethical Funds. And I bought into Goodman Group and I put that company into my long-term portfolio. Main reason behind that, and I have owned Goodman Group on and off in the past, but the main reason behind that is a little bit of the share price actually did pull back a fair bit. And in fact, I'll probably show you the chart later if I remember. And I do like the thematic behind Goodman Group right now, particularly with the company moving into data centers. And this is just a long-term investment, in my opinion. But Goodman Group, in my opinion, is a high-quality company. The other company bought was Web Central. And did I do a video on Web Central? Probably should have. That company actually sold off one of their divisions, or whatever you want to call it, and it was an absolutely spectacular divestment of that division. They sold it for significantly more than the market cap of the company, and the share price of Web Central soared higher. They will now have a lot of cash on hand, and even though I don't have the biggest faith in the management of the company, I think even if they do a few wrong moves with the cash they have on hand, I think they will make a few good capital allocation decisions. I've put Web Central into my short-term portfolio simply because I think there's a bit of a floor on the share price, not a lid, a floor on the share price, just because of the cash on hand. So anyway, long-term portfolio, only down 0.93% compared to the market, down, or the STW down 1.15. If I was just looking at the market, the STW is down about 3.2%, but you have to take into account dividends. My other portfolio, medium-term portfolio, this is just the small cap companies I think can become big companies in the future. And this portfolio is up 5%, or almost 5%, 4.88%. And the best performing companies in this: Energy One, Findi, Email Payments, Atlas Pearls, and Ansarada. The worst performing companies, not surprising, are Rectifier, Vection Technologies, which had a very disappointing quarterly. I shouldn't say that, but it's a concerning quarterly from Vection Technologies, Pointera, Cydev, Ventura. So a few companies there that are not profitable or are struggling to be profitable on an ongoing basis. But most companies in this particular list, I'm quite bullish about the future. And finally, the short-term portfolio. This is more of a technical or using technical analysis strategy. And this has been performing quite well, up 6.77% compared to the market, but the benchmark, which is down 1.15%. So again, I think I mentioned this in a few videos before. I have made a lot of mistakes in this strategy, and if I cut those mistakes out, I would be doing really well. So at this point in time, I'll just show you the opening positions. So at this point in time, one of the rules I'm going to have in this particular portfolio, and I am developing rules that I want to follow, and I have those rules set in place by the 1st of January. And one of the rules is if any company within this portfolio is down to 10%, that's an automatic sell. And at this point in time, we have a few companies that are down 10%: James Hardie, Resbed, Vista Group, and Integrated Research. So, and the other thing I should actually have in my rule book is there's something about liquidity, and I have had trouble now with a few companies in this portfolio when it comes to liquidity. Vista Group is a perfect example. So I should have a rule about liquidity. Best performing companies that I do hold right now: Step One, Email Payments, Megaport, and I'm thinking of maybe selling out Megaport because the share price has pulled back. So a lot of the hype A lot of the excitement in Megaport has petered out. It's just been fortunate over the last few days. We have seen a bit of a run up in the market. The share price of Megaport has risen to $10.15. Also got Digger Data here and Web Central already up 5.4% from when I bought. Very happy with Digger Data too. That was a beautiful trade in my opinion. Another company I want to sell out is Wagner's. It's just going sideways at the point in time. And again, liquidity is a factor there as well. So if you have any questions about these portfolios, the makeup, maybe even some of the rules I am developing, which I will put in place on the 1st of January, just leave those in the comment section of this video. So now on to the technical update part of the video. Why did I say video? Or almost said video. Anyway, this is the XJO. Look at that, beautiful. I already talked about the XJO in my week that was, so I won't dwell on this too much. If we do have a look at the weekly chart for the XJO, it's near the bottom of the channel. Wouldn't be surprised to see the XJO move towards the bottom of the channel. A lot of uncertainty in the markets right now, a lot of uncertainty in the economies. It's just been weird things are happening right now. Things that you think would be really negative are positive. Things that you think would be positive are negative. For instance, if we see unemployment rates keep going up in America, the market more than likely will go up because they think that's positive because interest rates won't go up after that, but it's actually negative because you don't want to see unemployment rise significantly because that means they're moving into recession, which will be actually bad for the stock market. And we've seen that time and time again. Too many people focused on interest rates. And I think there's a inverse relationship between interest rates and the stock market. There's not. We have seen that in the past. When we go through troubled times, through recessions, you will see interest rates go down at the same time as the stock market goes down. So even though we've been conditioned to believe interest rates and the stock market are inverse related, it's not absolutely true. A lot of times it is true, but it's not absolutely true. So people should stop fixating on interest rates. XSO, if you look at the weekly, in fact, I'll show you the daily. The XSO fell through a fairly important resistance or support level, just above 2,580, but we'll say 2,590, and has gone back above it. So nice recovery in the XSO. I was just listening to a podcast the other day, and they were making fun of technical analysis. And I just wanted to yell at them, when you make fun of something you don't understand, it's actually not a good look for you. You're making a fool out of yourself. You're showing that you are ignorant. And I just wanted that to yell that at them. But of course, it's a podcast and they're not listening. But so don't be fooled or don't make fun of something that you don't understand. It doesn't make you look smarter. It actually makes you look dumber. Particularly if you don't understand. You think you might understand it, but you don't. And that was pretty obvious when these two people were speaking and making fun of technical analysis. At one point, he mentioned, whoever it was, mentioned the share price or something has moved to the support or resistance. I don't know what. It's going down, so that means it's a buy. And it was obvious they didn't understand what they were talking about. They were just making fun. And I turned the podcast off after that because if you do that sort of thing, you're not looking good. Anyway, I sort of understand what they were doing. They're trying to make it out that technical analysis is absolutely BS, which makes them actually ignorant as well. Just thinking that. Anyway, onto the Russell 2000 index. This was very similar than the XSO. It fell through for a short period of time through a fairly important support level, but only for about 2 days. And look at that, beautiful rise in the XSO, not the XSO, the Russell 2000. If you don't know what the Russell 2000 is, the Russell 3000 is sort of like a combination of the New York Stock Exchange and the NASDAQ. It's like the top 3,000 companies on those two exchanges. And the Russell 2000 is a bottom 2,000 of those companies. So the smallest companies in the Russell 3000. So these are like the smallest 2,000 companies listed in America. So this is like a small cap proxy, and it has been struggling, particularly when you compare it to the NASDAQ. And the NASDAQ had a few good days as well. And interesting, with the NASDAQ, it's right at the trend line. So it is in a downtrend. And what you do with the downtrend, you just draw it to two highs. So there's a high here, a small high here. And then you can see all the next highs after that were lower than the previous highs, but they all go up to the trend line. This is a beautiful trend line, perfect trend line. And the NASDAQ is right on that trend line right now. So this could mean a few things. If it keeps going up from here, that means the trend is over. It's come to an end. We want to see it go above the trend line and stay above the trend line for a while. But if we see the NASDAQ go down from here, this will just be further confirmation of a downtrend in the NASDAQ. Now, the very fact that we had a really strong rally over about a 5-day period just means more than likely we are overbought, not oversold, overbought right now. And I wouldn't be surprised to see a little bit of selling coming in to the NASDAQ. And the Dow Jones, just like the Russell 2000 and the NASDAQ, has had a really nice rally and is at the previous highs we saw back in the middle of October. So a really good day or really good week in the stock market. And who knows what's going to happen next week? No one knows. You could make your own forecasts, have your own beliefs of what's going to happen, but no one knows the future. Absolutely. Now, onto some commodities. And the first one we're going to look at is iron ore. This is actually pretty good. This is a nice iron ore chart. I was wondering why my Mount Gibson shares were going up. That's the only iron ore company I own right now. The only other company I was thinking of buying in was Phoenix, which I've had in the past. And I'd say it's about 25 cents now, maybe. 23 cents, not much of a rally in the Phoenix. If you compare that to, say, Mount Gibson looks really good right now. That looks beautiful. But I do think Mount Gibson is undervalued. What about Fortescue? You'd think there's a bit of a rally in Fortescue share price. Yeah, definitely rallied up to the previous highs. Yeah. Ooh, look at that. You draw a line, look at that. Interesting where Fortescue is right now. And you would think that there's been a bit of a rally in BHP as well, and Rio Tinto. Not much in BHP. Wonder what's causing the lack of interest in BHP. Anyway, so iron ore looks really good right now. It looks actually really good. A nice high. And yeah, I wonder what's causing this rise in iron ore prices. Maybe something to do with China. I have no idea. Gold trying to get above 2,000. It's struggling to get above 2,000. I don't really care about 2,000. I want to see gold get above 2,060 and stay above 2,060. That would be quite bullish. In fact, I do have a few gold explorers, and under my new rules, I won't be owning any exploring companies in the future. That's just my new rules. Actually, I am allowed to, and that's it. Over all my portfolios, I think. Maybe only 2 portfolios. But anyway, I'm going to have my rules set in place by January the 1st. And one of my rules is no story stocks, no companies that don't have any revenue apart from 2. So I have to have high conviction on those 2 companies. Uranium, look at the weekly chart for uranium. Still going up. Actually down a little bit in the week, looks like. Let's get rid of... Decreased my face. Is this from Friday? I think it's from Friday, Monday, 30th of October. Yeah. So sort of going sideways over the past week. Not much in the past week, but still at when's the last time prices of uranium were this high? You have to go all the way back to 2008. You can see this little peak in 2011. That was around that. Was it Fukushima, whatever it's called, disaster? I can't believe that uranium prices were that high just then. And last time up this high was actually back in 2008. All right, so that's uranium. Oil struggling. Yeah, it's been struggling. So it was in this nice little uptrend from about June. It looks like maybe the top of the uptrend was September. And we saw a bit of a dip and then another nice little rise. But this rise, this high, the most recent high, was below the high before that. So possibly a lower high. And we've also got a lower low. So possibly a downtrend developing in US oil, down to $80.83. So down a fair bit from its highs, which were about $95 not that long ago, about a month ago. Bitcoin, keep an eye on Bitcoin now. It's in a bit of a nice uptrend here. Going nicely. So one day it went high. It sort of broke out on the 23rd of October, broke out above the resistance level, and it keeps going higher. Go Bitcoin. I do have a little bit of money in Bitcoin, not a lot. Lithium, is it keep still going down? It's still going down, but there's still a lot of interest in this sector. I mean, a lot of companies still listing on the ASX, lithium exploring companies listing on the ASX, and still a lot of non-lithium exploring companies releasing announcements about lithium, something to do with their mine or something to do with their exploration sites. They might have found lithium. It's surprising because lithium prices keep on falling. I think for a bottom, we need to see this froth completely come out of the iron or the lithium space. We're not seeing that just yet. Just yet. Remember that one of the best performing companies last week was TG Metals. Share price increased over 200% in one day because of some lithium drilling results. And I think if there wasn't this froth in lithium right now, you wouldn't have seen that sort of rise in the share price of that company. Copper, always keep a close eye on copper. That's sort of a proxy for the economies, and it's really nothing too exciting when it comes to copper at all. Coal. Well, coal's at an interesting level, still falling. There's a nice little rise, but now it's falling again. And looks like the $120 is an important level because that's a really long-term support level, resistance that turned to support, and I think eventually it's going to fall through $120. Bonds. Well, 30-year US bonds fell a lot on Monday. That's the week. So it did fall a lot over the last 3 days. So there's a bit of a correlation here between the bond yields and the stock market. So you can see the relationship there. Bond yields going down, so stock market goes up. But this could tell us that, or maybe suggesting that there's a weakness in the American economy, maybe moving towards a recession. So the bond market is saying more than likely interest rates won't rise because of pressures in the economy. But again, there's no absolute relationship between bond yields or interest rates. There's a relationship between bond yields and interest rates, but there's no relationship between bond yields going down and the stock market going up. It's a furphy. If anyone tells you there is a relationship between the two, there's not. How do we know that? Let's have a look at the weekly 30-year government bonds. And I think I've shown you this before. Oops. Let me go here. See how bond yields fell off a cliff in 2008? So this was the last half of 2008. What happened in the last half of 2008? That's when the stock markets around the world were absolutely collapsing. So there was a positive relationship between bond yields, interest rates, and the stock market at the same time. And I've seen this happen time and time again. When the economy is going into recession, you will see interest rates drop, but you also see stock markets rise or stock markets drop as well. But you can see we had a 40-year bond bull market, and that has definitely come to an end right now. The question is, how much further can bond yields rise from here? Do I have to show you the 10-year Australian? More than likely, it's going to mirror the 30-year American. Yep, it does. Still an uptrend, though. Still an uptrend. Anyway, I mentioned I'll put in, what I'll do is I'll put in the Goodman Group, show you Goodman Group, and what's the other one? WCG. And I'll put in Genus Plus. The ones I sold, I'll also put these in, Genus Plus. What's the other one I sold? AEF. All right, so Megaport. So I bought in somewhere around here, so July, middle of July, after the share price rose 33.8% in one day. So it would have been on July, would have been the June quarter results. So the market liked it, but the market didn't like the September quarter results. And this happens to Megaport all the time. The market overreacts or won't say underreacts, but the market reacts quite violently to the quarter results. One quarter they might like it, are a lot, up 33%. In the next quarter, they might not like it, and the share price down 16%. And what you don't want to see is you can see a lot of these down days in Megaport's share price, and a lot of these are on the quarterlies. Go back to last October, share price dropped 22% and then 11.8% in consecutive days upon the release of their quarterly. And then in January on the quarterly, down 24.7%. And then, so that's two negative reports, and then a positive report in June, and now another negative report. So I have no idea which way the share price is going to go from here. Just have no idea. I'm thinking maybe I should just take profits. Take my 16% profits here. I did want to see the share price get above $10. I've seen that. I'm just thankful the share price and the market has rallied over the last few days, and I probably should just take my profits. Collins Foods was an interesting one. This is another one I was thinking of selling. And just like the NASDAQ, you can see there was a trend down. Share price was, every time it hit this downtrend line, this sloping dash line here, the share price pulled back until the last trading day of the week. Share price moved above this downtrend, and that could be the end of this downtrend for Collins Foods, which is understandable because at around about $9.10, we'll say, was a really important support level for the company because that was the highs we saw back in May. Share price pulled through that level quite strongly on the 27th of June, and that's what you want to see when a company share price breaks out. And now the Collins Foods share price has tested that level 1, 2, 3, 4, 5, 6, 7, 8 times in the past month. And the share price has struggled to go below that, which means there's a bit of buying coming in when the share price of Collins Foods falls to between $9 and $9.10. Now the share price is $9.50. So hopefully the share price will go on a nice little rally from here. But again, it's going to be dependent on the market. Another company I was having a look at was Illumina. The main reason behind this is Illumina's at 80 cents. I don't know much about this company. The market cap 2.3 billion. The main reason I was having a look at Illumina was just where the share price is now compared to historical levels. So if I saw this chart for any company, my immediate first thought is this is not a high quality company. This is not the chart of a high quality company. You don't want to see the share price going from the top left to the bottom right. The top left is 2001, 2002. Share price of this company was as high as $8.25, and the share price has fallen since then. In fact, you might say the share price has been in a downtrend for the last 20 years. But if we go back in time, we have seen the share price get to this level, say between, we'll put it at this level. We've only seen a share price for Illumina get below $1 3 times in the past. In fact, we'll say 2 times in the past. Back during the GFC, so we're talking about late 2008, early 2009, share price fell below $1. We also saw it during 2012. It fell below $1 for a brief period of time. It tried to fall below $1 in February 2016, but the low of the share price was around 97 cents. And now it has fallen below $1 again. In fact, if the share price falls below, I'm going to see what it is, falls below 62.5 cents, that would probably be the all-time low for this company. So something's going on with Illumina, but possible, the only reason I'm showing you this is possible this could be a nice support area for this company, but I am staying clear of Illumina. This is just me sharing an idea with you. If you like this company, maybe this is the best time to buy this company if you're bullish on the outlook of the company. Goodman Group. So this is the monthly. Look at that beautiful monthly chart. So this is the chart of a high quality company going back to 2012. Beautiful uptrend. When you look at the daily chart, so they released their results on the 17th of August, and share price rose 5.7% on that day and 7.3% on that day. Share price kept on rising. Nice little pullback, and then the share price fell below $21, fell to $20, which I don't know why. Well, I do know why, but the share price has really taken off over the last few days, up to $22.50 as a high. So this is more of a long-term view, and I just saw the share price get below $21, and I decided to take a position in this company because I do think eventually this could be a really big player within the data center sector. So this was just me taking a position when I saw some value. in the company. Nothing to do with the chart at all. Unlike Web Central, who made that divestment, share price went up 177% on that day because it was an absolutely amazing divestment that the company did make. And I think the management of the company have to be applauded for that. I do know the management of this company derided by many people. And the reason they're derided, just look at the chart for Web Central. Now, Web Central used to be called Melbourne IT, and then Melbourne IT acquired 5G Networks, and this divestment is of the old Melbourne IT stuff, web domain stuff. So they're going to change the name back to 5G Networks, or whatever it's called, and that's not a bad thing, but the web domain has higher margins. Another concern I do have, but this company will have plenty of cash. It says here the market cap is 92 million. They're going to have $80 million of cash. I'm not sure if that's the right market cap. I think it might be a little bit higher than that, but they're going to have over $80 million of cash on hand. So it's going to be really interesting to see what the company does with that cash on hand. And the main thing here is, I think there is a lid, because if the share price falls, or the market falls to say $80 or $80 million, that means this company has, what's the word? They have, the cash is more than the company is worth. Net cash backing, positive net cash backing, or something like that. Anyway, so I think there is a lid or floor on Web Central's share price, and I took a position at 26 cents. Was it 26 or 26.5 cents? When the share price pulled back, I was waiting for that. Share price pulled back after that big rally on the 27th of October, and it's done it. Genus Plus, the main reason I sold out Genus Plus was I do think there might be some long-term thematics behind this company. It's more of an infrastructure, but one of the reasons I sold was because of a lack of liquidity. The share price just going sideways too. This was originally just a trade because I was trying to ride this uptrend here. Share price now going sideways. I decided to just take profits, a little bit of profits with Genus Plus. And Australian ethical funds, we saw a 3-day rally. I just decided to take the profits. Did I have? No, maybe it was a slight loss. And I was riding this uptrend here, and obviously the uptrend came to an end. And really, this one day, the 26th of September, share price fell 9.8%, was the get out day. For whenever you see a one-day candlestick like that on share price decreasing 10% on no news, that was a good sign that the selling is coming in. Someone just wants to offload all the shares, and I decided that's the day I should have sold out, but I kept hoping there was going to be a little bit of a bounce in the share price, but the bounce never came, just kept on falling. And 1, 2, 3, I've shown you 7 individual companies' charts. I have another watch list called the Everyday Watch List. So this is companies' charts I look at every single day. So a few companies in this I do like. For instance, CSL I have on here. I own CSL, but I just want to see how low CSL drops. So I think there's probably good value in CSL, even at $244, but a nice little bounce, just like many other companies. Charter Long Haul Whale. I saw a nice little bounce here, but still the downtrend is in play. And again, this is just mirroring yields, which makes sense. You'd say REITs and yields should be conversely related. So the way to play, if you think yields are going to go down, interest rates are going to go down, is maybe to play REITs, or you can play the TLT NASDAQ ETF. Nuix. You have car sales. We have Telstra on here. Macmillan Shakespeare, TPG. A lot of companies I have on this everyday watch list for many, many reasons. I'm not going to go through all these because how many companies have on this? 73 companies I have on the everyday watch list. A few of these companies I've mentioned in the past, for instance, say Ansell. Share price has bounced off the long-term support level at around about $21. Nice little bounce there. And anyone else want to show you? Sometimes I include in companies that have, like Noxo Farm, that had this massive run up in the share price. And I just want to see how the market, reacts after that run up in the share price. So Noxo Farm was one. Was this another one? Yeah, so Proteomics was another one. They had a day on the 29th of September when the share price rose 23.3%, and the share price has pulled back all the way to where the share price was before that announcement. And main reason behind that was because of resistance. The other one I should put in here is TG6. Put TG6. I just want to see how the market reacts, because that's a beautiful chart. This is a breakout. This is the definition of breakout. But I think too many day traders are in this right now. And it's understandable. Day traders love volatility. This is a day trader's wet dream come true. Anyway, that's all I have for this video today. If you have any questions about any companies I featured in today's video, any commodities, my portfolios, just leave those thoughts, your questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.